Hello everybody. In this video we are going to discuss about India 38, that is intangible asset. Now what is there in intangible assets? What is the meaning of intangible asset? How we can account the intangible asset? Now first we should know about the intangible asset. Here the intangible asset means it is asset. It is asset which does not have the physical substance, and here the existence of future economic benefits. So it must have the existence of the future economic benefits. So firstly we need to see existence of future economic benefit will be there, and the control over the future economic benefit will be required. How we will get the control? When we have the power to obtain those benefits, power to obtain that future benefits, and our ability to restrict other to access those benefits. Whatever the benefits having from that asset, we can restrict other to get that benefit from others. So if for example A is there and another patent is there and B is there, this patent belongs to this person, he is getting benefiting and he is trying to get the benefit. A can restrict from getting benefit from this patent, then ability to restrict that access the benefit, and he is having power, then it will be said that he is having control over the future economic benefit of that asset. Now after that, intangible asset must be identifiability. Identifiability means that is separable and transferable individually or arising from contact. It is identifiable if it is separable and arising from contact. Now following India's will be provided, and if the asset intangible assets we are providing, intangible assets shall be recognized if and only we have conditions was satisfied. And intangible assets, what when we are explained about the here, we need identifiability, control and existence of future economic benefits. Some cases we cannot identify them in assets. For example, we have market shares. It does not have the identifiable, so it cannot consider the intangible assets. Or sometimes we will go with the market and advertisement. We will provide the advertisement expenses. So whenever we are incurring some advertisement expenses, that advertisement expenses was simply we are incurring to promotional activity. Here we will get the future economic benefits, but the future economic benefit is not sure here, so marketing expenditure or advertisement expenditure are not considered as intangible assets. Or we are providing some staff training programs for the purpose of staff to get into knowledge, and we the staff is getting knowledge and he may leave our company at any time. We should not have the control, you can resign at any time. So employee trainings, whatever the training programs we are connecting, it will not be a intangible asset. Now condition, we are paying some skilled staffs or entities which should not have the control, they can resign at any time. Sometimes what we have now, we taking some employees and we have some contact for some period of time. So but if there is some restrictions like recruiting persons have work for at least some time, then it will be intangible asset, it may be intangible asset. Now intangible assets is recognized in books only. We have the conditions, that probable future economic benefit is there and cost can be measured reliably. then and only we need to recognize the criteria was happen. Condition can there. Now we are telling that we need to recognize the asset. How we can recognize the asset? So initial recognition will happen. Intangible asset recognized at cost. So we can recognize it at cost. Now for this cost we are recognizing at cost. For this cost, if you are acquiring or if you are internally generating, how we can post is, if it is relating cost include any directly attributable cost of preparing the asset for its intended use, then we need to calculate the cost of intangible assets will have purchase price, and for that purchase price we need to include the import duties and non-refundable taxes like tax, GST, etc. only if it is non-refundable. From that we need to exclude the whatever the amount trade discounts or rebates if we are providing, and we need to add the what this directly attributable cost for the preparing of the intended use, cost of employee benefits, professionals, legal cost of testing, and legal cost of fees, professional fees, consultant fees, advisor fees, or customization cost, testing cost, employment cost, or any other development phase expenses like internally generated intangible assets, any other directly attributable cost, we need to add this all items and what will be excluded from the cost, all taxes which are refundable. If it is refundable will not be included. Some cost of staff training, that is administrative expenses, cost of conducting like conferences for introducing or advertisement or launching of the new product, cost introducing a new product, and cost of advertisements or promotions whatever it may be, or premier expenses like startup expenses what we are incurring, or administrative general selling overheads or operating losses, we are incurring some operating losses, purchase of some maintenance contracts of intangible assets or subsequent cost of intangible assets like we are paying annual fees, royalty has percentages, and if we have some cash discounts or early settlement discounts, or we are internally generated interest on loan taken for purchase or internally generated intangible assets, unless it will be allowed in AS 23, then only we will to provide that interest expenses, research phase expenses, whatever the expenses we need to exclude from the intangible assets. Here specifically you need to remember, in case of internally generated assets, whenever we are recognizing internally generated assets, we are internally generated asset, how important. Now here we have two phases. One phase will be research phase, another phase will be development phase. Research phase means simply planned investigation to gain new knowledge. What means research phase means we are planning some investigation to gain the new knowledge. Whatever the expenses made during this research phase is not recognized as intangible assets. So whatever the expenses we are incurring in this research phase, we should not recognize as intangible assets. Now come to the development phase. In development phase, application of research funding to develop the intangible assets. Now development phase starts after establishment of some technical feasibility and regulatory approvals was happen. When all demonstrative means whatever the technical feasibility was completed for the intangible assets, then it have intention to complete the intangible assets, and entity has ability to use or sell the intangible assets. How the intangible asset will generate probable future economic benefit, the availability of advocate technical, financial and other resources complete the development and use the sell intangible assets, ability to measure reasonable expenses, then that expenses made during the development phase will be recognized as intangible asset. Only the all conditions were satisfied, it will be recognized the intangible assets. Now if we are in research phase, we need to account it has expenses in, then it is recognized. So for example, if we are a research project, if research project is acquiring, we are acquiring the research project, like in business combinations we are purchasing, then it may recognize as intangible assets. Now we are telling that recognize the intangible assets. Accounting treatment for intangible assets, simply the intangible asset, it will be asset, so debited to bank whatever the amount we are paying. Now at every year end, normally for fixed asset we will explain that it will be depreciated. Now here we need to tell that amortization expenses account debit to provision accumulated amortizations. This amortization will transfer to profit and loss account debit to amortizations. Now if we are purchase the asset, if we are just a second here, if we are purchase the asset was purchased is acquired in deferred settlement terms. Deferred settlement terms, then we need to recognize it as per Ind AS 16. If intangible is acquired in exchange of assets, we need to account same like as Ind AS 16. And if goodwill is acquired in business combination, then we need to account that in Ind AS 103. Now we are amortizing the assets. So whenever we are amortizing the assets, amortizing of intangible asset, how we can amortize here? Firstly, method of charging amortizations, we can use whatever the methods, means here for the intangible assets we can use methods SLM method for accounting amortization of intangible assets. Now for intangible assets amortization, we can go with the SLM, means amortization, then the entry will be calculation will be cost minus residual value divided by useful life. Or we are diminishing or reducing balance method, that is WDV, then the amortization will be whatever the opening value into the amortization rate. Or we are going to use the units of production method, means amortization is charged in ratio of establishment of estimated production units. Now amortization and intangible assets, when beginning it is available for use. So if it is available for use, then only we start the depreciation, that is ready for use. And when it will cease, only when it is de-recognized from the asset, or it is classified as Ind AS 105 as L for sale. Commencement will happen available for use. Stop cessation will happen when it is classified as L for sale, or we are disclosure, or we are selling that asset. Or if there is any change in amortization, and the useful life or residual value, it will be treated as change in accounting estimate, and the effect will be prospective effect will be provided giving for remaining future period. Also, in case of change in amortization method or useful life or residual value, we will use the carrying amount, like instead of cost of SLM amortization formula, we need to calculate the amortization for remaining future period. Now estimated useful life, the entity has useful life will be finite or indefinite. Accounting for amortization, here estimated useful life, legal life of intangible asset is not relevant. Accounting for amortization of intangible asset, at each year we need to provide amortization will be amortization account debit to intangible asset, and the amortization will be accumulated, accumulated amortization to accumulated depreciation, and profit and loss account to amortizations. It will be it may use, or you may use this one, and lastly we need to transfer it to profit and loss account to amortization. Now it is initial recognitions, useful life we are providing, amortization we are providing. When the entity subsequent recognition is happened, whatever the gain or sale of intangible assets is recognized in profit and loss account. Whatever the amount we are receiving, we need to recognize it in profit and loss account. It is Ind AS 38, whatever the intangible assets. So what we are learned from this Ind AS 38, in summary point, we started with the definition of intangible assets. What is mean by intangible assets? First we are talking about intangible asset definitions. Now intangible asset definitions will be simply, intangible asset means which is having which does not, with no physical substance here, existence of future economic benefits, and entity has control, and control means here we are explaining about power to obtain the benefit and ability to restrict other to access those benefits, and we have the identifiability. And whatever the here intangible assets, we should not consider intangible asset like market shares or advertisement or staff training or whatever the amount we are paying for staff. If we have any agreement, we may consider it as intangible. How we can recognize the intangible assets? Only when we have probable future economic benefits and cost can be measured reliable, then we need to recognize the intangible assets. For intangible assets, how we can recognize it? Recognize measurement of these intangible assets at cost. Definition of intangible asset: identifiable, non-monetary, without physical substance. It does not have the physical substance. Now we are recognizing as cost at cost. So here the cost will be included acquired amount, purchase price including whatever the amounts we need to add, and we need to deduct means like trade discounts or any related items. And if we are directly attributable cost, includes like import duty, purchase tax, legal fees, cost, professional fees, customization cost, testing cost, employment cost, we need to add. And we need to deduct expenses like cost of training, conducting conferences, advertisement, premier expenses, advertisement, administrative, general, operating. This all will be excluded. Now intangible assets, if we are intangible asset is generated internally, we have two phases. One is research phase, another one is development phase. Whatever the research means we are simply planning, investigating to gain the new knowledge. So these expenses will be transferred to profit and loss account. No intangible asset will be recognized. But if this research phase we are purchased as a business combination, then it will be treated as intangible assets. And the development phase here, the whatever the research fundings to develop the intangible assets, this development phase, after establishment of some technical conditions, we satisfied the all conditions, then we need to recognize the intangible assets. So the conditions may be technical feasibility will be there, intention to complete will be there, availability of selling of intangible assets, intangible assets generate probable future economic benefit, availability of future technical, financial, other resources will be there, availability of ability to measure the reliability of expenditure. This all will be considered. And intangible assets we need to recognize, and every year we need to amortize that intangible assets. Amortization of intangible assets will be provided in recognized in profit and loss account. And if it is assets have a useful life is finite, or then intangible assets is incurred based on the useful life, and if the commencement will started at when asset is available for use, and when it will stop, the cessation will happen when the asset was sold, or asset was classified as India as 105, then it will be stop. And the India is having indefinite life, intangible assets is not amortized, then we need to test the impairment by comparing its recoverable amount annually, or when there is indication for impairment. And useful has shall be reviewed periodically, and it will be charged to profit and loss account. This is main. And subsequent recognition, whenever the amount subsequent recognition will be whenever the asset providing amortization of assets, amortization not retirement of asset, you need to transfer it to profit and loss account. This is related to Ind AS 38.